Okay, listen up. What if I told you there's an investment that holds over 72 million pounds of physical uranium worth nearly $6 billion, has purchased 48 million pounds since launching in 2021 and hasn't sold or loaned out a single pound, acts as a pure play on uranium spot price without any mining operational risk or political complications, trades like a stock but gives you direct exposure to physical uranium stored in secure facilities across Canada, the US, and France, managed by Sprott Asset Management with over $40 billion under management, and is literally the largest physical uranium fund in the entire world. This isn't some speculative mining company hoping to find uranium someday. This is actual physical uranium sitting in vaults right now. Trading at $22.67 with a $6.25 billion market cap, this trust has become the institutional-grade way to invest in uranium. When uranium spot prices hit $100 per pound, which many analysts believe is inevitable given the supply deficit and nuclear renaissance, this trust moves dollar for dollar with that price. Could this be the safest, most direct way to play the uranium supercycle? Before I reveal which uranium investment vehicle I'm analyzing today, and trust me, this one's completely different from traditional mining stocks, welcome back to Smart Investing. I'm dedicated to finding world-class uranium, nuclear energy, and critical minerals opportunities that are positioned perfectly for the AI power revolution and the global clean energy transition. If you want pure commodity exposure without the headaches of mining operations, permits, or geopolitical drama, make sure you hit that like button and smash subscribe. You're not going to want to miss this one. Now, let's get into it. The investment I'm breaking down today is Sprott Physical Uranium Trust, ticker symbol SRUUF on the US OTC markets, and U.UU plus U.U on the Toronto Stock Exchange. This is a closed-end trust headquartered in Toronto, Canada, and it's literally the world's largest physical uranium fund, with a massive $6.25 billion net asset value. Now here's what makes this absolutely unique and frankly genius. Sprott doesn't mine uranium, doesn't explore for uranium, doesn't deal with environmental permits, labor issues, or political complications. They simply buy physical uranium oxide, U3O8, and uranium hexafluoride, UF6, on the spot market and store it in secure, licensed storage facilities. They currently hold over 72.4 million pounds of physical uranium stored across multiple locations in Canada, the United States, and France for geographic diversification and security. Since launching back in 2021, they've purchased approximately 48 million pounds of uranium from the spot market, and CEO John Ciampaglia has repeatedly and publicly stated they will never sell or loan out any of it. It just sits there, accumulating value. This is pure, unhedged, direct exposure to uranium spot prices with zero operational risk. When uranium prices go up $1, your investment goes up proportionally. No mining delays, no operational issues, no geopolitical headaches, just pure, beautiful commodity exposure. Currently trading at $22.67, this trust trades very close to its net asset value with minimal premium or discount, which is exactly how a well-managed physical commodity trust should operate. Now, there aren't traditional Wall Street analyst price targets here because the value is directly and mathematically tied to uranium spot prices. It's not based on company earnings or management execution. The bull case is incredibly straightforward. If uranium spot prices climb to $90 to $100 per pound over the next 12 to 24 months, which many commodity analysts believe is highly probable given structural supply deficits and nuclear renaissance kicking into high gear, the trust's net asset value increases proportionally, potentially pushing unit prices to the $28 to $32 range. That represents 24 to 41% upside from current levels. The bear case? If uranium prices correct down to $60 to $65 per pound due to temporary oversupply or reactor construction delays, the trust could decline to $17 to $19. But here's the critical thing to understand. With global uranium demand expected to literally double by 2040, reactor restarts accelerating worldwide, new builds ramping up, and mine supply consistently falling short of demand, the long-term structural bull thesis for uranium remains incredibly strong and compelling. This is pure long-term uranium exposure in its absolute simplest and safest form. May 2025. Sprott completed a $25.55 million non-brokered private placement specifically to cover general operating expenses for the next year, without being forced to sell any of their physical uranium holdings. That's brilliant capital management. The trust now holds £166.2 million, with net asset value of $4.64 billion. October 2025 added another £400,000 to their stockpile, bringing total holdings to approximately £72.4 million. The third quarter saw over £2.3 million purchased, the highest quarterly accumulation since Q1 2023. December 2025. CEO John Ciampaglia stated publicly on an energy podcast that global utilities remain dangerously undercontracted, with only £110 million procured in 2024, way below annual replacement rates. Sprott Physical Uranium Trust represents the institutional-grade, zero operational risk way to own uranium exposure without any of the complications that come with mining stocks. They hold the world's largest physical uranium stockpile at over 72 million pounds, with absolutely zero operational complications, zero permitting issues, zero labor disputes, and zero geopolitical risk. When utilities around the globe desperately need uranium to fuel their reactors and spot prices inevitably surge due to supply constraints, this trust captures 100% of that price movement with no operational drag whatsoever. There are no permitting delays that could postpone production, no political risks for mining in unstable jurisdictions, no rising production costs eating into margins, just pure, direct commodity price exposure. With global uranium demand projected to double by 2040, driven by nuclear renaissance and AI data center power needs, and structural supply deficits emerging as mines can't keep up with demand, this trust provides the absolute safest and most direct uranium exposure available to retail investors today. So there you have it. Sprott Physical Uranium Trust trading at $22.67, the world's largest physical uranium fund, holding over 72 million pounds of actual uranium sitting in vaults. This is pure commodity exposure without any of the mining operational risk or political complications. Now, I want to hear from you. What's your take? Do you think this is better than traditional mining stocks for uranium exposure, or do you prefer the operational leverage that miners can provide? Drop your thoughts and opinions in the comments below. And hey, if this deep dive added value and helped you understand this unique investment vehicle, do me a solid, smash that like button and subscribe to Smart Investing for more uranium and critical minerals analysis. Thanks for watching.